Good morning, my name is Carl Williamson. I'm the manager of the Nexus Global Solutions Fund and the Nexus Global Dynamic Portfolio. I speak to you today from our offices in London. It's April 2022. So the Russian invasion of Ukraine continued to be front and centre of investors' minds during the month. Following the initial knee-jerk reaction, financial markets recovered towards the end of the month. This meant that for the Nexus Dynamic Portfolio, which is entirely invested in equities, the return was 5% during the month, taking the year-to-date return to -4%. The multi-asset portfolio, Nexus Global Solutions, returned 1.5%, taking its return to the year to -5%. US equities recovered strongly and were some of the best performers in March. IT and healthcare led the way, while energy stocks continued to be strong. In terms of individual names in the portfolio, Tesla, Nvidia and Chevron were some of the strongest returns. Bond markets sold off strongly as yields rose aggressively during March. The US 10-year rose 0.45% to finish the period at 2.35%, the highest level in 3 years. It was a similar story for gilts. The move in the short end was the largest, with markets pricing in aggressive hiking for the next couple of years before levelling off. Hedge funds, infrastructure, property and private equity all delivered positive returns during the month, with Aspect, our trend following fund, being the standout performer, returning nearly 10%. We used a weakness in bond yields to add some exposure to fixed interest. We also added to some more defensive areas within our equity allocation, increasing exposure to energy and some of the more defensive companies. Against that, we took some profits in other areas, securing profits in Tesla and LSE, reducing both holdings. Inflation data continued to garner lots of attention during the month, with the US consumer inflation number hitting 7.9%, the highest level in 40 years. It was a similar story in Europe, with the equivalent there reaching 7.5%. The UK print came in at 6.2%, a little lower, but still a 30-year high and well above the Bank of England's 2% target. The labour market remains tight in both the UK and the US, where employment is under 4%, the lowest level since the onset of the pandemic. Both the Federal Reserve and the Bank of England put up rates during the month. The Bank of England did its second hike in as many months to 0.75%. A 25 basis point increase from the Fed reaffirmed the central bank's commitment to raising interest rates despite some geopolitical concerns. At the beginning of the year, GDP growth was anticipated to be 4% this year. Given what we've seen in the first quarter, this has now been revised down to closer to 3%. Clearly the growth is slowing, but we still think there is sufficient growth to support company earnings through the cycle. And in the absence of an escalation in the Ukraine situation, we believe profit growth should be in the single-digit area this year. Forward valuations of ease and outside of the US are below their 10-year averages. Bond yields continue to normalise, but we still remain optimistic about equity valuations and their prospects going forward. Thank you for listening, and I look forward to reporting to you in May.